Yeah, good morning, everyone. The US market saw some corrections yesterday, and the Asian markets are also uh, mixed bag, wherein uh, few of the countries are declining and other are increasing. Japan, Korea, and Australia are showing positive trend, whereas Hong Kong, China, and New Zealand are showing negative trend. Future of the US markets are positive, and in a commodity, oil continue to remain high and is near to $90, and aluminum and copper are more of a flattish. Iron ore is seeing some up move of around 3%, and and steel is up by around 1.5% in China. Dollar index has shown sharp up move and is at around $97. 2 days back it was 96, and generally when the up moves are there in the dollar index, the emerging market remain under pressure. So overall seems like more of a mixed trend which is visible in today's trade. And now I'll request technical team to take it from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Looking towards the Asian market, we believe our market is likely to open on a flattish note and we might see some range-bound trading session. Looking towards the Nifty chart, from the last 2 days, Nifty is maintaining a positive closing above the important supports levels. Yesterday also it's managed to maintain a positive closing above 17,150 levels, which gives us some sort of a relief sign. Uh, Going ahead, I believe that as long as Nifty sustains above 17,000 psychological level, this pullback rally is likely to be continued towards 17,300 to 17,400 levels on the higher sides. But for today intraday purpose, the immediate resistance is placed at 17,240. Any move above that level, we expect a momentum to be carried forward towards 17,300 to 400 levels on the higher sides. Whereas on the downside, the first immediate support is placed at 17,000 level. If today the market gives a closing below 17,000 level, then we can witness some profit booking, or again the cautious view likely to be triggered, and which might take a Nifty towards 16,900 to 16,800 levels on the downsides. But compared to the Nifty, the Bank Nifty is really doing very well. Yesterday, it has just surpassed the 50 and 100 DMA, the important averages on the closing basis, which gives a very good sign on the technical front. Going ahead, 38,000 psychological resistance level is the important level. If it surpasses that level on the closing basis, then definitely this rally is likely to be extended towards 38,000 and 38,400 and 38,600 on the upper side. Whereas on downside, the immediate support is placed at 37,500. Below that level, 37,300 and 37,200 levels can be seen. The overall view will remain a cautious itself, but yes, pullback rally cannot be denied after the large sell-off. So this pullback rally is likely to be continued, and one can trade this pullbacks rally, but with the strict stop losses. Coming towards the Nifty Finance, for today intraday purpose, 17,640 is the first resistance level. Above that level, 17,800, 900 levels can be seen. Whereas on a downside, 17,370 is the first support level. Below that level, 17,250, 17,200 levels can be seen on the downsides. So these are the important support and resistance levels for the three indices. Coming towards the stock specific, stocks are really doing very well from the last few trading sessions. Among that, in the mid cap, fact really doing very well. Technically, this particular counter has just formed the inverse head and shoulder formation. Yesterday, even I have generated a buy call on this particular stocks. One can take a long position. In fact, for a target of 160, stop loss can be kept at 137. Another stocks really looks good is the MCX. This particular counter is also doing very well. From the last 2 days, we are witnessing a very strong pullback rally in this particular stocks. I believe it has a potential to reach up to 1620, 1610 levels on the higher sides. One can take a long positions at the current levels. and stop loss can be kept at 1520 for a target of 1610. I think that's it from my end. I request derivative guys to take a call forward.
Thank you, Swati. Overall, the open interest seems to have come down. Yesterday was the expiry, and that is the Nifty Bank open interest has been down, and it is actually below. It is at. Also, one to note here is even though witnessed some bounce from the lows yesterday, the VIX did not come down that much. It is still continuing to hover at 21, which it will continue to hover around until budget at least, and then probably stay there till the UP election results.
I think his line got disconnected. Jian, you can start.
Yes, sir. Yeah. So,
Nirav, sorry. Nirav has again come. Nirav, can you speak or you will speak afterwards?
Sir, I'll speak. You can hear me, right? There's network issue.
Yeah,
here.
there were some disturbance. Your voice was not clear.
Okay. I'll start again then. Okay. Yeah, see, on the derivative front, you see the VIX continues to remain about 21. It is likely to stay there till the budget announcement and probably till the UP election results as well. From the open interest front, those have been seen, which is good. The PCR is at comfortable levels, bounced from the lower levels, which is a good sign. Here, you see that the 17,000 level. Still, the highest put base is around 16,500, and which is one small negative for Nifty. If 17,000 is broken today or probably in the next 2-3 days, you might see some selling coming in, which can take Nifty towards 16,600, 16,500 levels. Looking at the overall open interest, still that is possible. This scenario is possible. So, for the first 2 or 3 days, it is a budget announcement. Probably then you will witness some bounce back. There is a good base formation which is happening around current levels, and which is a very good sign. But these base formations take time.
So I think we again lost him. Jian, you can start now. I'll ask him to wait.
yes. Yeah. So Canara Bank result yesterday was above estimate. Credit cost came down to 1.3% against 2.1% last quarter, and also slippage ratio is almost halved from 4% to 2%. So for a PSU bank, 2% kind of slippage ratio is a good sign. While SMA and restructured book have remained constant, but looking at overall result, we feel view needs to change from neutral earlier to now positive for Canara Bank. IIFL Finance result improved because of write back of provisions and also because of decline in restructured book, which again almost halved from 4% to 1.8% quarter on quarter. Loan growth, although remains muted at 11%, and we feel once the loan growth accelerates, stock can get re-rated here also. We are positive. LIC Housing Finance posted good results after many quarters, mainly because of higher NIMs as well as lower credit cost. However, stress in developer book still needs to be gauged as to how much pain is still left, and post that one can take a call. But as of now, we feel we are neutral over here. Nippon Life AMC result was in line with expectation. AUM grew in line with that of industry at around 4% quarter on quarter. Market share was also stable. We are neutral over here. Home First Finance result improved. This company posted the highest loan growth we have seen in the BFSI space at 27%, and should reach 30% by next quarter. Gross NPA was flattish at 1.7%, but if we consider the change in RBI norm for daily recognition, then gross NPA increased to 2.6% from 1.7%. but we feel market already knows this fact, and for quite a few NBFCs, we saw in the case of Shriram Transport also that gross NPA was up because of this reason. However, if we focus on the 1+ and 30+ days past due, then that continues to fall every quarter. So that is a positive sign. We are positive on Home First Finance. We feel there is decent upside from this level. Motilal Oswal result declined. There was good performance on broking side, but it was pulled down by the mutual fund and home finance segments. For further re-rating perspective, mutual fund business is the one that has to fire, because that typically commands much higher valuation than the broking segment. So we are neutral here. RBL Bank result was above expectation because of lower provisioning, and however slippage, although it has come down quarter on quarter, but overall at 5.76%, it still appears to be very high. Slippages were higher on the MFI side, which where in fact the gross NPA increased quarter on quarter. So that is a concerning thing, the MFI part of the business. We remain neutral on RBL Bank. Fino Payments Bank, the new IPO which got listed, the result has improved quarter on quarter. Revenue growth was 14%, while EBITDA grew by 45% quarter on quarter. This appears a good growth on the back of operating leverage, as well as higher contribution from high margin products like CASA and CMS products, the cash management service. Expect good performance in Q4 as well. They have guided for profit growth of 15% quarter on quarter. So positive on Fino Payments Bank. PSP Projects result improved. Revenue grew by 25% year on year. EBITDA margin was almost at all-time high of 15%, but management said that it will settle down back to historical levels of 12 to 13%. Because of operating leverage, profit grew by 60% this quarter. So expect good reaction in the stock in next few days. We are positive. TD Power result declined. Sales increased by 7%. However, because of lower gross margins, profit declined by 7% year on year. We will need to see the management commentary as to what is the future course, but in the near term, we feel the stock will remain sideways. That's it from my side. Thank you.
Sir, should I continue or Nirav would like to go?
Yeah, you can continue, na. Nirav can take it afterwards.
Okay, sure. Good morning, everyone. Taro Pharma has announced their results. That's the Sun Pharma subsidiary. Result has improved to Q1Q. Sales has came at 139 versus last quarter 132, and even in fact the gross margins have seen some improvement at 54.7% versus 47. Operating margins have also improved to 26%. Or basis on this results, we expect Sun Pharma to be in green. Yesterday, SRF had their con call, and the commentary given by the management was quite positive. The company is very bullish on the specialty chemical business, and expect Q4 to be better than Q3, though Q3 itself was a strong quarter. And they expect the margins also to improve in Q4 further, which has already improved to 29% in this quarter, and the 9 months numbers are 24%. The management expect that Q4 margins would be better. Weber Global has come out with the results. Results has improved Q and Q. The reason to see these numbers are Q and Q is because they have recently started their Germany business, and the management had guided for around $2 to $3 million of EBITDA loss for this year on the launch of Germany business. So as compared to last quarter, the margins have improved. Last year, those numbers were not there. We remain positive on Weber Global. Laurus Labs has announced their results, and results were below expectation. This is the second or third quarter the company is not able to perform very well. The margins have further came down to 27.7% versus expectation of 28%. We would get to know more details in today's scheduled con call. La Opala announced their results, and results have improved. The company continues to report good numbers, and this was being the festive quarter. The numbers are really good. Margins have improved to 41%. which is an improvement on Q1Q versus YOY. Though it's a little expensive as it is trading around 51 times, but basis on this good numbers, we expect the company to continue to do well. Colgate Palmolive announced the results. The numbers came during the market hours, and results were broadly in line with the expectations. Vocart also came out with the results which came during the market hours, and result has improved for the company for this quarter. That's all. Thank you.
Yeah, good morning, everyone. CE Info Systems has posted decline set of numbers both on the revenue and the margin front. Stock is trading at 103.2 times Q3 annualized EPS. Transport Corporation of India has posted improved set of numbers both on the revenue and the margin front. Coforge has posted inline set of numbers for the quarter, with order intake coming in at $247 million and order executable for next 12 months came at $701 million. Dollar revenue came in at 221.6 million versus expectation of a similar number. Management indicates that they are on track for $1 billion revenue in next fiscal year. FY22, the company has raised revenue guidance to 37% in CC terms from earlier guidance of 35%. On organic basis, revenue growth is expected to be 24% in CC terms over last year. Adjusted EBITDA margin is expected to be in the range of 18.9 to 19%. This indicates Q4 the company will have a margin expansion of around 130 bips. Outlook is positive on the company. Acelia Solutions has posted improved set of numbers both on the revenue and the margin front. Stock is trading at 25.6 times TTM EPS. Birlasoft has posted in line with expectation set of numbers for the quarter with CCQ on Q growth revenue coming in at 5%. TCV came at $182 million. In this, net new TCV stood at $121 million. Year to date TCV stood at $474 million. Revenue came in at $143.4 million. EBITDA margins came at 15.2% versus expectation of 15.2%. 15%. Management indicates FY23 growth will be better than FY22. Demand environment is robust. However, management indicates that there are lower number of larger deals in market. Opportunities available in smaller deals. Stock is trading at 21.9 times FY23 EPS. Mahindra Logistics has posted its result yesterday. Although the revenue has improved Q1Q and year on year, however, company has posted below expectation numbers on the margin front. Stock is trading at 40.6 times FY23 EPS. Root Mobile has posted marginally above expectation set of numbers for the quarter. Thank you.
Yeah, I'll just take it from here, sir. Yeah. So on the derivative front, see, the view doesn't remain changed. At this point of time, we believe some selling can come in, but that will be short-lived. I believe for Nifty, 17,000 is becoming a good base. We are bouncing from 17,000 quite a lot, and open interest built up has been seen around the 17,000 put strike. Along with the 16,500 put strike as well. So some base formation is being made in the last 2 or 3 trading sessions. This base formation will take some time, but probably after 4 or 5 days, we might see some bounce coming in. Till then, some sort of selling can come in, and if 17,000 is broken now, you can go sell for a short-term target of around 16,800, 16,700 odd levels going forward, and you can place stop losses around 17,100 odd level. For the next 4 or 5 days, I believe the range should be around 16,600, 16,500 odd levels on downside to about 17,200 levels. It should be range bound for the next 4 or 5 days. From the stock specific front, at this point of time, metals seems to be a good bet. Good open interest has been shared. Liquidation has been seen. So definitely some sort of buying can come in these counters going forward. Also, PSU banks have seen tremendous amount of open interest reduction. So if looking at the open interest, definitely PSU stocks are the ones to PSU banking stocks are the ones to buy. Canara Bank, SBI, and Bank of Baroda remain the top bets at this point of time. They should witness good buying going forward. That's it from my side. I'd like to ask the fundamental team to take over, please.
Yeah, apart from that, Dalmia Bharat came up with the numbers and numbers were declining. Even if we see the Ramco cement number, they were also very poor. The southern market has faced a problem of extended monsoon, and that's why the company have sold most of their material from south to eastern market, and larger sale was seen in eastern market, where the realization was comparatively quite low, and that got impact on the EBITDA margin as well. And apart from that, the cost increase on account of the coal is also impacted the companies. So Dalmia Bharat results were below, and company reported EBITDA per ton of around 718 versus last quarter of 1026. But the valuations are becoming attractive with every decline. The stock is now 9x EV by EBITDA of FY23. It's a quality company, so any major decline can be used to accumulate this stock for a longer period. Apart from that, the results for next Monday, Ajanta Pharma is likely to report numbers, and numbers are likely to show some decline. There were some one-off gain in the previous quarter, which which you can say there was a pre-sales which has happened in second quarter, and that such third quarter is seeing some decline. Otherwise, the result could have been okay. Quarter on quarter, the revenue is expected to decline by around 6%, and EBITDA margins are expected to come by 100 basis points. Then DLF is likely to report number. The company has not reported pre-sales number this time, so that number needs to be watched in this results. Most of the real estate company have shown very good growth in their volume, and even DLF has launched one project wherein they had reported around 1500 crore sales just in one project. But that was in January month, so may not be coming in the pre-sales of the previous months. So overall outlook seems to be positive for DLF. Twarikesh Sugar is likely to report number. Here what we expect that most of the sugar companies are likely to report better number in this quarter, mainly because the quantity which they sold in this quarter seems to be higher, as the sugar season started a bit early in this year. And the realization also was higher in this quarter as compared to last year, wherein the realization was at around 32.5. This time the realization is around 35 rupees. And apart from that, the inventory which they will be selling will be of the last year, where the cost of production was lower. You may be knowing that the government, UP government has increased cane prices, but with that cane price increase, sugar will be coming in the next quarter. So this quarter result is likely to be good for most of the sugar company, including Dwarkesh Sugar. Then Hindustan Petroleum is likely to report numbers. Numbers are expected to show some improvement. We had seen that Cochin Refinery has reported number, and their numbers were good. And similar trend may be visible in Hindustan Petroleum as well. And same is the case with Indian Oil Corporation, that also is likely to report number on Monday. Then KEC International is expected to report declining number, wherein the sales is likely to increase by around 7% year on year, but margins are likely to come off from 9.1% to 7.7%. Quarter on quarter, there will be some improvement expected. KPIT Technology is likely to report number. Here, the dollar revenue growth is expected at around 4.5%, and margins are likely to be stable. Results is likely to be okay set of number. Then Navin Fluorine is likely to report number. Here the expectation is of a declining number, wherein year-on-year revenue is likely to decline by around 2.5%, and EBITDA margins are expected at around 24.2, whereas last year it was around 26%. Last quarter also the margins were 24.8. So quarter on quarter and year-on-year both margins are indicating some declining trend. Then Orient Cement is likely to report number. Here again, this is a southern and eastern player, so result will be impacted because of what is we had seen Remco and Bharat Cement as. So result is expected to show some declining trend. Then Sun Pharma is likely to report number. The numbers are likely to be okay set of numbers. Year-on-year revenue is likely to increase by 8.7% and EBITDA margins are likely to remain stable. Then Tata Motor is likely to report number. Here the numbers are likely to show improvement quarter on quarter. Last quarter was company has reported EBITDA margin of around 6.6% and this quarter it is expected at around 10%. That will be more driven by India operation and some improvement in JLR as well. So both together will help it to improve the results. The results are expected to be better quarter on quarter. The key thing is that going forward in fourth quarter, JLR should show quite substantial improvement. So outlook seems positive for Tata Motor. UPL is likely to report number. Here the numbers are expected to be more of a okay set of number. Revenue is likely to increase by around 13% year on year, but the margins are likely to come off a bit and EBITDA is likely to remain flattish year on year. And Vinati Organic is likely to report okay set of numbers. So these are all results for Monday and thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.